Hey, what's up YouTube? It's Todd Horst here with Tasty Tracker. Today I wanted to go over charting and how I chart. Everybody has a little bit of a different style and they all learn different ways and they take it to whatever extent they want to take it, and that's fine. So you can use my video, I guess, as a starting point and see what you like and what you don't like. I will say probably the biggest thing to think about here is that it's constantly changing. So the way I chart and the indicators I use are different today than a month ago, and then the month before that, etc. So I don't know if it's necessarily my growth or the changing of the seasons or what, but yeah, I switch up my indicators to pretty frequently to fit my mood at that specific point. Okay, so my personal preference and the premise of basically everything I do is to keep things simple and repeatable. And so with that in mind, I basically only do price levels 98% of the time. And I try to watch out for triangles. Those are points that the underlying stock has to make a move up or down. So things are coming to a head, and it's got to decide whether it's going to start trending bullish or bearish, because you'll see it's down here with these wedges. But anyway, I say watch for triangles. That's basically all I'm looking for. And I'm not a charting guru. I don't know all the names. I don't know the formations, but my view on the charting patterns is similar to indicators. They're only as good as the ones that everybody else knows and uses. So if you've got some complicated chart pattern that you think you've identified, is the majority of the public going to see that and act accordingly? Because that's what will dictate whether it continues to move for the end of that pattern or to have the same outcome that you're expecting. I hope that made sense. But really, all of these things are just looking for a divergence in a pattern. And I will say the last bullet point here really is that they're hard to differentiate between different whatever symbols or whatever, and identify in real time. So yeah, I guess what I'm saying is, what's the difference between these bottom two? On the surface, both of those sort of looked like they're coming to a horizontal point, and then the one is start going up and the other one's going down. And you could say, well, this one's entry point was from below and this one was above, but is that always going to be the case? I mean, I guess technically to get this pattern, but anyway, I just don't see how I'm sure there's a pattern which is coming from the bottom and then it goes back down to the bottom. Maybe that would be the triple top. Yeah, because this would have had three tops here if it turned down. Anyway, the whole point here is like, what would you rather spend your time doing? Trying to memorize all of these patterns and then move forward, or do you just want to start trading? So, okay, that's enough intro on my theories on charting. So here we have Thinkorswim. This is the best charting platform there is. You can do TradingView for quick, simple charts, but if you're actually going to be doing anything substantial, you're going to be want to be in Thinkorswim. So let's collapse the side here. Okay, so on my chart, the indicators I'm interested in, I have volume split out. You can go into chart settings here and click the overlap volume button to move it up to this top chart, or you can have it unchecked to be in its own. Then the other two are MACD, which I have the default settings, but you can see what the settings are here: 12, 26, 9, exponential, no. But those are the defaults, and then the RSI are again the defaults: 14, 70, 30, close, and wilders and no. But any of these indicators really could be their own video in and of themselves, but the point is that up here the underlying is overbought, and down here it's oversold, and stocks or any symbol is going to want to come back to an equilibrium. So if it hits any of these extremes, then those are good either selling, shorting, or buying, going long. And it's the same thing, that's how they're all read. So the MACD is the same at any one of these extremes, the inflection point where it wants to go switch directions. The additional thing here with the MACD is you get to see sort of the strength of the move, because the bars will be longer and darker color, or brighter, I should say, I guess, brighter color for the stronger move. So here you can see for the first period of time, the red is increasing, and so the bearish movement there is getting stronger. So I think that's really all the indicators down here. Up here, I talked about before, I have the 50 SMA and the 200 SMA. I don't really like many other indicators. I have the VWAP, but you're not going to be able to see that really on the 1 year, 1 day chart. But the 50 and the 200 SMAs are pretty commonly used, so they work pretty well because other people are also using those as indicators. So anyway, let's go ahead and right click here, and I can clear drawing set, hit yes, and it starts us off. This is what your chart would look like if you had just gotten into Facebook charts for the first time. So again, this is the 1 year, 1 day. I'm only interested in this chart basically because I'm putting on positions that I expect to last for multiple days. So you can know what chart you should be looking at based on how long you want to be in the position. So if you want to be in for multiple minutes, then you would look at the 1 day, 1 minute, or maybe the 1 day, 5 minutes. You should, even if you're doing those shorter positions, short plays, short-term plays, I should say, I guess, you're still going to want to know the larger context, where it is on the 1 year, 1 day anyway. But yeah, okay. So this is Facebook's. I have my toolbar here pinned, and I really only have the trend line, the note, price level, pointer, and time level. So I use the time level when I say I've got an expiration in April, even though it's marked here in the dotted line. Those are the options expirations. I'm still going to put a red line there to just remind me that that's my next expiration. Then I'm going to hit the price level, and anywhere I see topping out, I'm going to put a line, and it doesn't have to be perfect. I could have drawn that a hair lower, or whatever, and then it would have acted as a support over here a little bit better. But the whole point is that you're getting in the ballpark, and if you see that line that I just drew here acted as a resistance back here, as a support here, as a resistance here, as a support the whole way through here. Here it hung around that area for a bit, and then we moved up. So we're looking for points that are pretty big inflection points. Okay, did one down there, and we'll do one up here. I can even throw one here. And that's basically all I'm going to do. I could put one right here. Yeah. And then the way I sort of know whether I've done enough is I look over here. If there are lines too frequently, you're just polluting your view. Each sort of bracket, I guess, should be around 10% or so. So right there, that's 6%. And if I do this one, that's 6%. That's 5%. So, I mean, that's not a hard rule of thumb or anything, but things tend to move in 5 or 10% increments, depending on the price of the underlying. But that's a good starter point. I wouldn't want to put anything more than that. And if you really want to, you can draw sort of a channel that it's coming down. If it's going down, you want to be on top. You want to draw the line on top, and if it's going up, you want to draw the line underneath. But then you can see right here, we went through. If I had just drawn this support here, once you go through, then that's an indication that your support line's broken, and so you might want to consider removing any bullish positions. That's really all it is. I think that's a good enough primer. If you have any questions, let me know, but I think the key here is to not overthink it, both in patterns and the number of lines that you have. I actually, like I said, I don't have many trend lines. They're almost all price levels because I'm looking at everything horizontally. And then knowing what time frame to look at, I think is important. But yeah, if there's anything else you want to know, I can answer any questions you have on the way I do things. As an alternate for the SMAs, you can use EMAs or Bollinger Bands. Pretty much, to me, they're kind of 6 of one, half dozen the other. I like these two SMAs. I've been running with these for a bit, but really, they're all sort of basically get you the same thing. So anyway, thanks guys. Later.